Hey traders, I want to make another video about trends and volatility. This is my second video and hopefully be a little bit better. Basically, I want to go over the types of market conditions or the two basic characteristics that help define market conditions. So the first one I want to go over is talking about volatility, what it means to me and what it means to other people. A lot of people look at volatility based upon the VIX, which is a really long, in-depth calculation, factoring in various options and etc. But in reality, volatility, when you think of volatility, you're trying to think of basically how much money you can get out of the market in a certain amount of time, and like the length of each stroke as the market moves up and down. So to me, I define volatility as the area of price movement over time. So I'll just use the VIX because it's here. Here we can see like these little values. You know, if these were like 5 points on the ES or 20 pips on the Forex, you know, you could say, oh man, wow, if this was like per 5 minutes, you could get a lot of money in there. That's essentially volatility. Trend, on the other hand, is the ultimate direction of price, and that can be taken by giving a unit of time frame and taking the summation of price movement. So the negative price movement and the positive price movement will give you a total net movement. All right, so here I just wanted to show you some aspects about volatility. Um, Here we can see, and this is one of the trades that I took. The volatility was kind of good in this area, but one thing that volatility can do is it can make it where your stops are harder to place. Basically, because the market is moving so fast, it will like bump above those trend lines more. As the price approaches a sell point, for instance, here, uh, you know, there's just going to come up to the line with so many buyers that it's going to bust through that a little bit. And that's always going to happen in generally, but as the volatility increases, that's going to happen more. So for volatility, I sort of created a few attributes of volatility that you can think about and identify and to take in consideration. The first one is that volatility and time frame equals 1. That's just another saying as volatility goes up, the time frame that you want to trade on goes down. And for instance, if we see here, I have a larger time frame on the left and a smaller time frame on the right. Getting in on because the volatility is increased and it's moving faster, you're not going to have a stall out period longer. Well, you do eventually here, but there are a lot of times that you can actually mix it, like on this hour chart. Like if you look over here in this area, we have these long wicks. You know, if you're looking for dojis or something like that, you're not going to get it. The volatility is it's just moving too fast. You have to drop down to a smaller time chart. And so what that means basically is like if you're trading and you're set on using two set charts, you're going to, I mean, you may come out ahead in the long run, but you'll trade better if you be a little more flexible. Some of the master traders that I know who are a lot better than me and make a whole lot of money in single days, they are constantly just like flipping through the charts, you know, larger time frames and smaller time frames, just whatever helps them visualize the price. Another thing is, as I mentioned previously, is that stops. As volatility increases, your stops are going to go down. If we look back here at this drop, that was way more than people were expecting to move at that point. And you know, some people may have had stops about right here, and those got just completely taken out. And the opposite is what I'm saying here. Volatility divided by profit over time equals 1. That just means that as volatility increases, so does your profit per over time increase. Like you're going to make more money faster. And you have to capitalize on that, or you should capitalize on that. Especially if your scalpers tend to do really good in volatility, partially because, well, they're getting like these huge moves in a short amount of time, but also because the market is doing more retracements, and they tend to fade a particular time frame, even if they're trading with a time frame. And if there's not enough volatility, you know, if it's just like kind of going in a single direction with no pullbacks, then scalpers are going to have a hard time getting good buy-ins, you know. But that's not to say that you can't have both. Here we have a certain aspect of volatility characterized by this trend, and we also have the trend itself, the overall upward movement. And then these little movements would be like the volatility within the trend. So you can have both, and those are sort of the degrees. So let's look at trend. Here we have, let's see, this is the pound dollar. And overall there is a large trend, and I talked about in my previous videos about trends within trends, and you can see these trends. But some things about trends is definitely if you're looking for longer term profits, you know, if you want to lock in for the week, this is definitely the way to go, is finding good trends. And also even for scalpers, you know, trading, like overall we have a downtrend. You know, if you're trading like even in this little bits here, if you're trading the pullbacks, you're going to be good, you know. You'll win more times than you lose. Particularly, I've noticed that shorts, for some reason, always tend to be working out better than longs, and that's from decades of market data. It's just something I've noticed. So, the other thing I want to mention is, as you can see here, we can see good examples of different varying volatility and trending. And so you probably want to think about it on like a scale, you know, like here I have these parallel lines. We have basically zero trend, a slope of zero. If you were to have a moving average, it would be very like sort of wiggly if it was in straight, if it was a long moving average. So if we could say, okay, the slope is zero here, you're not going to make much money trading if you're just a trend trader solely. However, the volatility is pretty decent here and up and down in these areas. But it can also go into a trending volatility, high volatility mode, and it can also go into a sort of a low volatility trending mode. Those are usually intradays that I've noticed, like a slow grind up or a slow grind down. Typically on Fridays you'll get low volatility trending days.